All right, let's jump right in. There's a story buzzing all over Wall Street right now, and we've got to talk about it. It's gold. You know, that ancient store of value? Well, it's on an absolute tear, just smashing records left and right. And it's got everyone asking the same thing. What on earth is going on?
Get this. Just this week, spot gold prices blew past a number that, honestly, seemed almost unthinkable not too long ago. We're talking over $4,600 an ounce. That is a stunning, brand new, all-time high.
And this isn't some slow, steady climb. Nope. The price has already jumped something like 6%. And we're only a few weeks into the year. A move that explosive? Well, it demands an explanation.
So that's exactly what we're going to do. Think of us as detectives for the next few minutes. We're going to follow the clues, unpack all the powerful forces from what's happening in Washington, D.C., all the way to global hotspots, to figure out what's really fueling this incredible rally. All right, let's dive in. Our first big clue takes us right to the heart of the U.S. financial system. We're talking about the Federal Reserve. So news just dropped that the Fed chairman himself, Jerome Powell, is under investigation. And look, this is way more than just another political headline. This is a bombshell. It injects a huge amount of uncertainty into the market. Now everyone's speculating. Could he step down? And if he does, you could get a new Fed chair with a totally different game plan. Okay, so to understand why that matters so much, we have to talk about a key idea in finance called opportunity cost. It sounds complicated, but it's really not. Let me break it down. Just imagine you've got some cash stashed under your mattress. Sure, it's safe, but you're missing out on the interest it could be earning in a savings account, right? That missed interest, that's your opportunity cost.
So how does this tie back to gold? Well, gold is a lot like that cash under the mattress. It doesn't pay you any interest. So just think, if a new Fed chair comes in and starts cutting interest rates like crazy, that opportunity cost of holding gold, it just plummets. All of a sudden, holding onto that shiny, non-yielding metal starts to look a whole lot smarter than keeping your money in a savings account that's barely paying you anything.
But this story is much, much bigger than just the Fed. Let's move on to our second clue, because what's happening is a full-on global scramble for safety.
I mean, look at what's happened in just the last few weeks. We've seen tensions flaring up again with Iran. Then you have the U.S. launching a military operation in Venezuela, which actually led to the capture of its president. Honestly, any one of these events would be enough to spook the markets. But put them all together, you get this powerful wave of global uncertainty.
And it's not just us saying it. This is exactly what analysts on Wall Street are pointing to. You've got guys like Rajat Bhattacharya at Standard Chartered saying these events are precisely why his team picked gold as one of their top investments this year. It makes sense, right? When the world feels unstable, investors instinctively run for cover, for what they see as a safe haven asset, something that's going to hold its value or maybe even go up when everything else is chaotic. Okay, but here's the thing. These immediate shocks, the investigation, the global tensions, they're really just pouring gasoline on a fire that was already burning. They're all happening against the backdrop of a much bigger, more foundational shift in the global economy. So, what's going on in that bigger picture? Well, for starters, most analysts are expecting the US dollar to get weaker this year. At the exact same time, you have major countries, including the US, running up these massive fiscal deficits, basically spending way more than they're taking in. And what's the reaction? Central banks all over the world are buying gold. They're actively trying to diversify their reserves and move away from holding so many US dollars. This isn't just some boring accounting move. It signals a potential long-term shift away from the dollar's dominance. It's like a perfect storm for anxiety about paper money. And the results of all this pressure that's been building? Just look at this number. In 2025 alone, gold gained nearly 65%. That's the biggest one-year jump we've seen in decades. So this recent spike? It's really just hitting the accelerator on a trend that's been building for a long, long time. So all of this brings us to the million-dollar question, or maybe the $5,000 question. With all this momentum, where in the world could the price of gold go from here? Well, you can bet the big names in finance are weighing in on this one. HSBC, for example, is saying they believe this momentum has plenty of room to run and that it could push prices even higher just in the first half of this year. In fact, they're floating a target that really makes you stop and think. $5,000 an ounce. Now, they're quick to say the ride could be volatile, for sure, but the potential for it to keep climbing, it's clearly there. And so that's where we'll leave it. We're left with this really fascinating question. Are we just watching a temporary spike driven by fear, a flight to safety that'll just fade away as these crises eventually resolve? Or are we seeing something bigger? Are these deeper structural shifts in our economy actually signaling the dawn of a whole new golden era? The answer to that question, well, it's going to define the markets for years to come.